If you've not watched part 1, Statutes, Laws, and Regulations Common to All Lines, please do so before watching this video. The link is in the description. Hello and welcome to FastPass University, the only place where you can learn all of your insurance exam content for free, state by state. No paywalls, no giant courses you're forced to buy, just clear lessons that help you pass fast. Please make sure to subscribe because we are dropping new state videos every week, as well as all of the insurance content. We will be rolling that out simultaneously with all the state laws and regulations, and eventually, depending on when you're watching this video, we will have all of the insurance content and all state law regulations on our page for free for always. All right. In this lesson, we are going to go over the property and casualty laws and regulations for New York. This is technically a part 2 video. So if you have not watched part 1 yet, New York regulations that are common to all insurance exams, you're going to want to stop, go watch that, and then come back to this. I will put the link in the description. All right, let's get started. All right, we are going to do a quick kind of high-level recap of video 1. There's a couple things that may be a little bit specific here since we are going to property and casualty, like the pre-licensing education hours. So for property and casualty, there are 90 hours pre-licensing education requirement. Now that is for property and casualty. For the property and casualty insurance license, it is 90 hours. If you were just doing personal lines, it is 40 hours. So while you can learn all the content here with us for free, you do have to meet a pre-licensing requirement in the state of New York, actually be logged into your courses and such. That may change, in the next couple of years, but as of right now, you do have to complete your pre-licensing education through a state certified course. If you do not have one already, you can check out our website at fastpassinsurance.com. We have a partnership with WebCE. They already have the best priced pre-licensing courses out there, and you also get an additional 10% off by going through our website. So if you need one of those, go ahead and check that out there. All right, and continuing education is 15 hours every 2 years, but that is per line. So if it's P and C, it would be 30 hours. Plus the mandatory hour in ethics. And then there's also a 1 hour in flood, but 3 hours of flood to sell in the NFIP. If you don't know what I'm talking about, you're going to want to check out flood insurance in your content, or depending on when you're watching this video, on whether or not we have dropped a video on flood yet. The DFS regulates New York insurance. They, issue and revoke licenses, investigations, do fines, fiduciary duty. Remember, you need to handle premium funds appropriately and honestly with integrity. Go over the anti-fraud laws. We did all of this in video 1. Acknowledging claims, all of that. So again, watch part 1 first, but we won't recap on that too much. Same with the prohibited trade practices, all of that. But we are going to get into the state laws and regulations for New York that are specific to property and casualty. So the laws and regulations are going to test kind of on 2 parts, not kind of on 2 parts, completely on 2 parts. The general laws and regulations that we went over in part 1 that are, specific to all insurance exams. And then you will have some content questions specific to property and casualty. If you are only taking personal lines, then you can stop the video once we start talking about commercial policies. But other than that, these are specific to property and casualty. We're going to go over dwelling and homeowner endorsements, New York auto insurance laws, special property programs, and then we will circle back to the commercial property and liability, so that's at the end of the video. We'll also cover workers' comp before that. So we will kind of do this in a U shape. We're going to do dwelling, auto, special property programs, workers' compensation, and we'll do commercial property last so that those of you that are taking just personal lines can hop off the video then. So let's dive in. All right, dwelling policy endorsements specific to New York. There are certain special endorsements that modify your standard dwelling policy. Same when we get into some of the other policies, homeowners, commercial, that are kind of above and beyond just the general provisions or endorsements or things like that that you learned in your property sections. All right, we are going to start with dwelling policy provisions for New York. If you need to brush up on dwelling policy versus homeowners, things like that, please check out our other videos or, go over that in your coursework. Again, regulations should always be like the last thing that you learn. You want to make sure that you understand all of insurance and the policies and those concepts, etc., before working on the regulations. All right, so this is an endorsement that makes, goes above and beyond the standard provisions or rules you would have learned about the dwelling policy. So these, all of those still exist, but these kind of extend or go beyond. So the DP 0131 special dwelling provision, it includes some unique insurance laws for consumer protection regulations so that it matches the rest of New York law. And if you remember from video 1, consumer protection, that's like the whole point of all these regulations, right, is to protect the public when working with insurance. So this includes mandatory notices, modified perils and exclusions, and claim handlings and structure. So mandatory notices, insurers must provide 45 to 60 days notice for policy cancellation or non-renewal, complete with a valid explanation, adhering strictly to New York state guidelines. So what is this difference between 45 and 60? It is 45 days notice for cancellation. They must provide it in writing. Everything insurance pretty much must be in writing. But that's going to be for both. But 60 days notice for non-renewal. So that is different from the standard, 30 days notice. So remember the difference between cancellation and non-renewal. Homeowners policies, dwelling policies are usually good for a year. Now, you don't normally write them on the 1st. I mean, that can happen. But let's pretend your policy is good from January 1st, 2026 through January 1st, 2027. If the policy were to cancel at all during that time period, anywhere in this calendar year, during the policy period, so not calendar year, because you could have wrote your policy, on March 15th. But within the policy period, if the policy cancels at any time during then, that's a cancellation. So if the insurance company is canceling your dwelling policy, and this is actually going to be the same for homeowners, they must provide cancellation notice within 45 days prior, right? Or at least 45 days prior is how I should have said that. So that the person has enough time to go, purchase other insurance. Now, a non-renewal would be if they were not doing it here. So I'll put cancellation here. So if they were non-renewing NR, and that would be at the end of the policy. Like, we're going to continue to let you, ride your policy out, but when this policy period expires, we are not renewing your policy. They must provide 60 days notice for that. And again, that must also be in writing. All right, modified perils and exclusions. So freezing. This excludes damage to fences, pools, foundations, or retaining walls. So they are excluding freezing as a coverage for other structures, right? So these are, fences, pools, um, foundations, or retaining walls. So other structures. Theft. There is no coverage for dwelling under construction until occupied. Vandalism is excluded if the dwelling has been vacant for over 30 consecutive days. And wear and tear specifically excludes corrosion, mold, wet, dry rot, and inherent vice. So, wear and tear is generally excluded, which we do go over in part 1 too. Those kind of carry over. But things like, written notice must be provided, as soon as reasonably possible. Must be paid after 30 days. Let me reword that. Paid within 30 days after decision. They must begin investigations within 15 days. Again, just those claims provisions that we did go over in part 1. All right, so some additional dwelling endorsements. There is the automatic increase in insurance endorsement that automatically increases coverage limits, typically by 2 to 8% based on inflation, to help keep pace with rising construction costs and property values. So an example, a home insured for $300,000 increases by 4% annually without requiring policy changes. Now, you don't need to know the specific number, right? Because that's going to vary by policy and company, and by, inflation overall, and what that percentage is to keep up with the cost of living and cost of construction, etc. Just need to know that the automatic increase in insurance absolutely exists for dwelling policies in the state of New York, and that it will automatically increase coverage limits annually to keep up with the pace of rising construction costs, property values, and such. Broad theft coverage. This expands theft protection significantly by covering theft of property both on and off premises, including mysterious disappearance. It also covers the property of guests and removes certain exclusions found in basic theft coverage. Now, theft must be added as an endorsement, but once this endorsement is on there, this is going to expand on dwelling policies to allow for covering of theft of property both on and off premises. We normally only see that in homeowners policies. So this extends to dwelling policies in New York, as well as dwelling under construction. Provides essential coverage during active construction phases before the dwelling is complete and occupied. This includes protection for building materials on site, completed portions of the structure, and damages from perils like fire, vandalism, etc. during construction. When used from foundation through final inspection during new construction or major renovations. So this is a provision that extends to dwelling policies in New York. Again, these are usually things we only see in homeowners policies. So this is something, unique for dwelling policies and what you need to know for the dwelling policy portion of the state law regulations. All right, we are going to move on to homeowners. So just like dwelling policies, there are some homeowners policies endorsements. All of these laws and regulations are basically what makes it unique from everything you've learned from just basic standard policies, right? So what you've learned about dwelling policies, what you've learned about homeowners policies, and on all of that exists. However, there may be a couple things that are a little bit unique, a little bit different, like the 45 days for cancellation notice and 60 days for non-renewal, where generally we would see 30 across the board. So These are just some of those unique things. So hopping into homeowners. Here are some core New York homeowners endorsements and the things that you need to know for this section of the laws and regulations. So just as we went over the cancellation and non-renewals, the special provision for homeowners, same thing, 45 days instead of 30 days for cancellation, 60 days for non-renewal, those specific claim handling procedures, and includes New York required coverage provisions. Same thing like that we just went over with the dwelling policy. And then it modifies policy language to comply with the New York insurance law. Because obviously, if they are changing things or, these endorsements are included, the wording is going to be need to be changed within the policy documents. All right, so earthquake, HO0454. Again, you do not need to know the numbers, but the earthquake endorsement for New York homeowners policies covers structural damage to dwellings from an earthquake, includes damage to other structures and personal property in case of an earthquake. It is subject to a separate deductible, typically 5 to 15% of coverage A. It also covers additional living expenses during repairs. So this is an endorsement that is attached to the homeowners, and that is the earthquake provision. Identity fraud expense is another one of those endorsements. Legal fees to defend against lawsuits are included in the policy. Lost wages for time off work to resolve fraud. Notary and certified mailing costs, and loan application fees for refiling. So typically the limits are $15,000 to $25,000. That's going to be policy specific, but it is an included endorsement provision, for homeowners policies. All right, scheduled personal property. Items listed individually with specific values. It covers all risk perils, so that makes it broader than standard policy. No deductible applies. Covers mysterious disappearance. This is common items like jewelry, furs, cameras, musical instruments, and such. So these are actually listed on your policy. So instead of just your personal property, which again, you'll go over this in more detail in your homeowner sections, but personal property just covers all your personal property. And let's say that's $100,000 personal property. You may have specific things that are higher value because the limits on jewelry are much lower. You may only get, so much if you didn't have this specifically listed. If you've got, there's celebrities that, people break into their house during important games because they know they're not home and steal their necklace. And imagine it's, a $10 million chain with diamonds, and they're like, all right, we're going to give you $2,500, right? So no, the scheduled personal property, those things need to be added. But this provision covers all risk with no deductible. It covers mysterious disappearance, and that's what that makes this provision, unique. Personal property replacement cost. It pays full replacement costs without depreciation. Standard policy pays actual cash value. And so, example, a 5-year-old TV is destroyed. It's going to pay for a new TV, not depreciated value. So they are going to pay full replacement cost without depreciation. Normal policies, our actual cash value. All of the homeowners policies must have replacement cost. And home business, it increases business property limit. It's typically from $2,500 to $10,000. It adds business liability coverage for home businesses and covers business equipment and inventory. Does not cover employees or professional liability. You would need separate policies for those, but it does increase the business property limit and add liability coverage. Those would be the most important parts of this, as well as covering business equipment and inventory. All right, so we have covered the dwelling and homeowners special provisions. We are going to go a little bit out of order, like I said in the beginning. and go past some of these commercial endorsements. We will come back to those, but I want to cover auto so those doing personal lines can hop off the video before we get into commercial. If you're doing property and casualty, stick around for the whole video because we're going to cover commercial stuff last. So, all right, so New York auto insurance laws. New York requires all drivers to maintain specific minimum insurance. As you know, all states are going to require a minimum auto liability policy. For New York, that is 25, 50, 10. Not going to dive too deep into this because you should know this from your previous lessons or check out our videos and such. All right, so $25,000 per person, up to $50,000 per accident or per occurrence, and then $10,000 property damage. Okay, those are New York's minimum auto liability limits. If you don't already know that because you've had to buy a policy or have insurance in New York, then you definitely need to know that. They will absolutely ask you that. I can almost guarantee every state will ask you what its auto liability limits are on the exam. So make sure you are comfortable with that. Now, New York has this additional death coverage. These higher limits apply when the accident results in one or more fatality. So this will instantly double those minimum liability limits. So it would go from 50,000, 100,000. It's not going to increase the property damage. What they're doing is covering the bodily injury per person, per accident, per occurrence. So that's doubling it to 50,000, 100,000 in a wrongful death accident that occurred with, one or more fatalities. Personal injury protection, PIP, is a $50,000 minimum. And uninsured motorist coverage is $25,000, $50,000. So it matches that bodily injury. And UIM is mandatory in New York. You can decline it, but it must be in writing. And they actually have to file that and have proof that they have it in writing that you rejected uninsured, underinsured motorist coverage. All right, so be comfortable with these numbers. Guarantee you will see at least one question on this, if not more. Proof of required insurance. Of course, insurance ID cards must be carried and presented upon request. That can be electronically. It can be, on your phone. Most people carry their insurance card on the app on their phone. So, but you must be able to present it upon request. The IIES system, Insurance Information of Enforcement System, tracks compliance statewide. Exam tip, the DMV receives electronic notification of all insurance lapses through the IIES system. This triggers automatic license and registration suspensions. This is unique. Not many states have this yet. I imagine that they all will, but New York has this in place that any insurance policy that cancels or lapses, they have to notify it to the state, to the DMV through this IIES system, Insurance Information of Enforcement System, and that will trigger, automatic license and registration suspensions. So you do not want your auto insurance policy to lapse in the state of New York. So be comfortable with what this is, what it does. They like to ask you a question about that as well. All right, moving on to the New York Auto Program and default coverage. So New York Automobile Insurance Plan, NYAIP, they will list out the full name, the New York Automobile Insurance Plan, but be comfortable with the acronym as well. This provides coverage access for high-risk drivers unable to obtain insurance in the voluntary market. Speed drivers with poor driving records, multiple violations, or previous coverage denials. All licensed insurers must participate and accept assigned risks. So what it is that this New York automobile insurance plan is in place. If somebody went to go, they went into a State Farm office and tried to get car insurance because you need it to be on the road. And so State Farm says no. Then they go across the street to Allstate and they also decline. Then that triggers them to qualify for the NYAP. So they must have 2 denials in the regular voluntary market. Then they would qualify for the NYAIP. Now, all insurance companies must cover this. So they could say, right there in that Allstate office, even though they've been declined, they can say, we can't write you this policy. You've been declined 2 places. We can write and bind this policy for you. It's a special policy. It's going to cost a whole lot because these people are high risk. So every insurance company must participate in this and bind the coverage, but it is actually kind of managed and funded and taken care of through the New York automobile insurance plan. But it helps people that can't obtain insurance in the regular voluntary market. They can get it this way. The biggest question you'd see here is the 2 denials. And what is it for, right? So it provides coverage, access for high-risk drivers unable to obtain insurance in the voluntary market. So know that as the definition and know the 2 denials. New York is a no-fault state, okay, for PIP coverage, Comprehensive Motor Vehicle Insurance Reparations Act. So the purpose is it ensures immediate payments for medical expenses and lost wages regardless of fault. Notice of claim must be filed within 30 days of the accident. Benefits cover medical care, rehabilitation, lost earnings, and other reasonable expenses up to policy limits. Exam tip. New York is a no-fault state. PIP pays first, regardless of fault. Liability claims require serious injury threshold. There are certain states that split that up. It could be like a percentage. So, if you were 40% at fault, it's only going to cover 40% of the injuries. Or there's some states that have at fault coverage. If you were even at fault at all, then it's, how it pays out, etc. So New York is a no-fault state. Personal injury policy is going to pay, and it's going to pay first, regardless of who caused the accident. Okay, so probably a good reason to carry limits above and beyond the minimum auto liability limits. But for the exam, you just need to know that. All right, some New York auto policy endorsements. Amendment of policy provisions. So the New York Amendment of Policy Provisions, it modifies policies for New York laws. Again, that cancellation notice, you're going to be seeing this throughout. Cancellation notice, 45 days. Non-renewal notice, 60 days. And it modifies arbitration provisions. You don't need to get into details there, but that's, how things need to be handled through arbitration before lawsuit. So we've seen this 45 days and 60 days in 3 different policy types already. And it's bolded every time. So definitely make sure you're comfortable with that. The exam loves asking the difference of these. So cancellation notice within 45 days, non-renewal notice 60 days. And once again, as always, it must be in writing. Everything in insurance must be in writing, right? Towing and labor costs. This covers towing and on-scene labor, not shop repairs. Limit $25 to $100 per disablement. Does not apply if a vehicle is stolen or the accident is covered by collision or comprehension, the comprehensive coverage. So if your, tire blows out while you're on the road, but it didn't, cause an accident or something, a deer didn't run out in front of you, making this comprehensive, but it's just kind of one of those towing and on-scene labors. If you need to get your vehicle towed, or that on-scene labor like replacing the tire, jump start, stuff like that, are endorsements that are covered, usually $25 to $100 per disablement. And it is not going to apply if the vehicle is stolen or that this would be covered under collision or comprehensive. So towing and labor cost on scene covered. All right. Miscellaneous type vehicle extends coverage to specialty vehicles, motorcycles, ATVs, motorhomes. Coverage types adapt to vehicles, same as standard auto. Must have usage restrictions, no racing. So you can cover, ATVs, motorcycles, side-by-sides, things like that under the same type of provisions and policy coverage that you would an auto policy. It has to, not be used for racing or demolition derby, things like that. There's going to be some restrictions. But it's going to cover them the same as a miscellaneous type vehicle if it's going to be driven on the roads. All right, named non-owner coverage. This provides liability coverage for those who drive cars that they do not own. No physical damage coverage for non-owned vehicle. This is primary coverage if vehicle not regularly furnished. It is for individuals needing proof of financial responsibility without owning a car. So if you are regularly driving a car but you don't own the car, they can have named non-owner coverage, and it will provide liability coverage for those who drive cars that they do not own. For individuals needing financial responsibility without owning a car, and no physical damage coverage for non-owned vehicle. It's to give them that minimum liability they need while driving on the road. Rental vehicle coverage extends insured's existing auto coverage, liability, collision, and comprehensive to rented vehicles. So, when you go to pick up a rental car and they're like, do you want to add our insurance? You do not have to. Rental vehicle coverage automatically extends from your regular policy. What you already have on your regular policy is going to act in place while you're using a rental car. Applies domestically, so throughout the United States, its territories, and Canada, but there are duration limits, often up to 30 days. Joint ownership coverage covers vehicles jointly owned by two or more individuals that are not married or not in the same household. All named insureds are named insureds with full rights. This ensures proper liability and physical damage coverage. So if they're not married, not in the same household, but two people own this vehicle together, that insurance is going to give them joint ownership coverage and give them the same rights as named insured, and ensures proper liability and physical damage coverage. All right, we are going to jump back. There's one more concept to go over for that covers personal lines, and then I'll explain a little something to everybody taking personal lines before we hop in to the commercial and workers' comp. All right, so real quick, the some additional protection endorsements for property policies, homeowners and dwelling. Additional protection endorsements. Personal injury. This extends liability coverage beyond bodily injury to include libel, slander, false arrest, and invasion of privacy claims. So personal injury is an included endorsement for property policies. And although we are going to talk about workers' comp in more detail for those taking property and casualty, you do need to know that workers' compensation does extend to homeowners policies for certain resident employees. It provides workers' comp coverage for household employees like housekeepers, nannies, and gardeners. It covers a housekeeper injured while cleaning your home. So that does exist in the homeowners policies, which is unique to New York. And water backup and sump discharge or overflow. This covers damage from water backing up through sewers, drains, or sump pump failure, a common and a costly exclusion. This is generally excluded in policies. You can add it as an endorsement to homeowners policies, and that's probably what you were taught when you were going over the homeowners sections. But This is a provision that is included in New York property policies. So standard policies exclude sewer backup, but this endorsement adds protection against a frequent cause of loss. So really cool that all of these additional things are just part of the policies. All right. If you are taking personal lines, don't leave just yet. We are done with the laws and regulations that are common to personal lines. What I would suggest, though, is to fast forward to the end of the video when we do the quiz. I will tag that and put a timestamp in the description so you know where to fast forward to, because a lot of the quiz is going to cover the majority of what we've learned up through personal lines. Or if you want to stick around and learn about some commercial policy provisions for the state of New York and a little bit more on workers' comp, cool, hang out with us or jump forward to that quiz. For those taking property and casualty license exam, you'll need to know this, so don't go anywhere either. But let's go over the commercial property and workers' comp, and then we will be rocking through that quiz and be done with this lesson. All right, so commercial property and liability endorsements. Builders risk changes. This covers buildings under construction, including materials and fixtures. So it modifies the standard property policy. So builder's risk is covered under construction, including materials, materials on site that aren't even used yet, and fixtures. So that is covered under commercial property and liability endorsements. Protective safeguards. Requirement requires maintenance of specific safety equipment like sprinklers, burglar alarms, fire extinguishers. Limitation: failure to maintain required safeguards may void coverage for related losses. So there are some required safeguards in place, like you must have sprinklers and up to date and fire alarms or fire extinguishers and burglar alarms and things like that. So protective safeguards must be maintained, because failure to maintain may void coverage for those certain losses. And hired auto and non-owned auto liability. If the business has a commercial auto policy, it's going to cover hired auto and non-owned auto liability. So liability for vehicles rented by the business or employee-owned vehicles used for business purposes. Example: an employee using their car for personal car for a delivery and causes an accident. This endorsement provides coverage. Utility services direct damage. This is going to cover property damage caused by failure of off-premises utility services. So electricity, gas, and water. So even if it wasn't on premise and something, a covered peril covered it, this is for off-premise utility service, like things that are out of your control, would generally be excluded. But this covers property damage caused by failure of off-premise utility service. And utility services time element. It'll also cover business income losses and extra expenses when utility failures interrupt business operations. Right? So those are, the common property and liability endorsements for the New York state law regulations relating to commercial policies. All right. Workers' compensation in New York. Okay, so workers' comp is mandatory. Mandatory. Virtually all New York employers must carry workers' compensation law. It is required by law for any employer with employees, even if it is one employee. Okay, so yes, workers' comp is mandatory. Workers' comp provides no fault benefits to employees injured on the job. It serves as the exclusive remedy. Employees cannot sue employers for workplace injuries except in cases of intentional harm. So right here it says no fault. So that's important to know. So even if you were, you saw the wet floor sign and you decided to run and slide across it and fell and busted out your knee, which was, completely your fault. You should not have been doing that. It's still going to be covered. Okay, so regardless if you were at fault, when they say workplace injuries except for intentional harm, They mean if the employer was intentionally harming the employee. It's going to cover the employee at no fault, pretty much under all circumstances. Required, it says most employers with employees must carry workers' comp coverage. There's going to be a very, very few limited instances where it is not required, but you don't need to worry about that or be tested on that. Just think of it as yes, it is mandatory. Sole proprietors and partners may elect coverage, and that's really going to be about the only instance where it's not mandatory. It covers injuries, any injury arising out of and in the course of employment. Grave injuries, severe permanent injuries that exceed the serious injury threshold, and occupational disease, illnesses resulted from workplace exposure. Benefits provided are medical expenses, disability payments, rehabilitation services, and death benefits for eligible dependents. It is going to cover for children and spouses in the event of death. Children up into the age of 18, spouses forever, as long as they don't get remarried. But they could ask you, what does workers' comp cover, and give you, workers' comp covers all except, and they'll throw in something else. So know that it does cover medical expenses, disability payments, rehabilitation services, and death benefits. Okay. Exam tip: exclusive remedy is a common exam trap. Employees cannot sue employers for workplace injuries covered by workers' comp, except for intentional acts. So workers' comp is there to provide the insurance, provide that medical expense covered, disability payments, rehab services, death benefits, and such, in exchange for the employees are not able to sue, again, unless it was an intentional act. All right. Some federal workers' comp laws and New York coverage sources. Federal Employers Liability Act, FELA. Okay, you do need to know these. They love these questions on the exam. So, Federal Employees Liability Act covers railroad workers injured on the job. Unlike state workers' comp, employees must provide employer negligence to recover damages. So, they must prove that something that the employer did, something that the railroad company did, caused their, claim for this. So, I wish that they would, just I wish they'd call it, the Federal Railroad Workers Act, but no. FELA. FELA equals trains. All right. Not really, but it covers railroad workers. But I had no way. If you can come up with a fun acronym or a way to remember that, in my notes, I wrote FELA equals trains when I took this exam 15 years ago. So, U.S. Longshore and Harbor Workers Compensation Act. This one's getting a little better. It's at least kind of saying what we're covering here. This provides workers' comp benefits to maritime workers, longshoremen, and harbor workers injured on navigable waters or adjacent areas. Okay, so Longshore and Harbor Workers Compensation Act. Make sure you are comfortable with maritime workers, longshoremen, and harbor workers, and the navigable waters when you're making your flashcards and such. And then the Jones Act. This covers seamen and crew members working aboard vessels. So allows injured seamen to sue employers for negligence. So this is not the coverage for the crew members and maritime workers and longshoremen. That's this, right? The U.S. Longshore and Harbor Workers Compensation Act provides those benefits, but the Jones Act allows people in boats or, on the, working on the cruise and whatnot to sue. But again, that's like literally how I wrote my flashcard, and it was like I knew enough from that then. I knew that what the boats meant, right? But it allows them to sue. That's the Jones Act. All right. So, Federal Employers Liability Act, railroad workers. But you must prove employer negligence to recover damages. The U.S. Longshore and Harbor Workers Compensation Act provides workers' comp benefits to maritime workers, longshoremen, and harbor workers injured on navigable waters or adjacent areas. And then the Jones Act is in place where it does allow seamen and crew members that are working aboard vessels to sue if there was negligence from their employer. New York State Insurance Fund, state operated fund providing workers' comp coverage as an alternative to private insurers. So this is the New York State Insurance Fund. It is operated by the state. It provides funding for workers' comp coverage, unless they've decided to get it through private insurers for different coverages and things like that. Self-insured employers, large employers with financial capacity to fund their own workers' comp obligations, do not need to get that mandatory workers' comp insurance. They're also not going to qualify to use benefits from the New York State Insurance Fund. If they have the financial capacity to fund their own workers' comp obligations, they can do so, and that is called self-insured. You can become self-insured for all kinds of things. You can self-insure your home or your auto. They also allow that ability for workers' comp obligations. And then employer groups. Multiple employers can pool resources to self-insure collectively. So maybe it's an industry where you make a whole lot of money, but workers' comp claims are very minimal. That they're like, we can handle these on our own. We're going to self-insure. And you may see that with large employers with the funds to do so, or multiple people within the same type of business will pool their resources together and self-insure. So that is an option. Be comfortable with the terms there. All right. New York Disability Benefits and Special Property Programs. The New York State Disability Benefits Law. Purpose of this, it provides wage replacement for employees disabled by off-the-job injuries or illnesses. Who is covered? Most private sector employees working in New York. So it will provide wage replacement if you are disabled, even for off-the-job injuries or illnesses. You must have worked at least 4 consecutive weeks for the same employer to qualify, and benefits are weekly cash benefits up to 26 weeks per disability period. So I actually was in another state that has this same type of law. A lot of states don't, but New York is one of the few. But I was in California. California has the same type of thing. And when I was pregnant with my daughter, I just was not handling the pregnancy well. I was just throwing up constantly, like constantly. I was going to the hospital like every other day, getting fluids for my V's and all that. I could not keep anything down. I was losing a ton of weight, which is not good when you are pregnant. So I actually got, on that state's disability benefits law program, and it provided payment for me for the several weeks that I was out of work. So just giving you an idea of what that is. Now, again, it's going to be a percentage of your income. It's not going to be the full amount, but it helps people that in case you got something going on that qualifies as a disability, and we're not going to get into all of the things that qualify as a disability. They're not going to test you on that. But you need to know that it is off the job injuries or illnesses that prevents you from work. As long as you have worked 4 consecutive weeks for the same employer, then you qualify. And then another testable thing they're likely to ask the 26 weeks per disability period per occurrence, I guess. And these are for non-work related, off the job injuries or illnesses. All right. So just be comfortable with the time frames there. 4 consecutive weeks for the same employer. It's going to cover up to 26 weeks per disability period. Residual and special property programs. The New York Property Insurance Underwriting Association, the FAIR Plan. This is the same thing like we talked about with auto, right? So it's going to provide basic property insurance to property owners unable to obtain coverage in the standard market. So again, must prove that property has been denied by at least 2 private insurance companies. And then you would qualify for the FAIR Plan. So you do need to know the FAIR Plan, and that you also need to know that the New York Property Insurance Underwriting Association equals the FAIR Plan. So they could ask you, the New York Property Insurance Underwriting Association is also called, and the answer could be as simple as the FAIR Plan. So do be comfortable with those 2 terms, and that it is the whole purpose of it is to provide basic property insurance for those who are unable to obtain insurance in the standard market. And to be eligible, you must have been denied coverage by at least 2 private insurance companies. Coastal Market Assistance Program, CMAP. It assists coastal property owners in obtaining windstorm coverage in high-risk coastal zones. So be comfortable with this title and what it does. So for those that are living on, the coastal area and may have a hard time getting coverage for windstorm-related perils, this will assist coastal property owners in obtaining that windstorm coverage. Exam tip: FAIR Plan provides access to coverage when private insurers decline. They offer basic property coverage, not comprehensive protection. They're not getting this awesome full-blown homeowners policy, but it's going to be, covering against those, basic standard perils, fire, lightning, and such. All right, so we have covered the state laws and regulations pertinent to personal lines and property casualty. So let's do a quiz together. I will read through the questions. If you need to pause the screen, go for it. We will go over the answers together afterwards. Question number 1. How many hours of pre-licensing education are required for a New York property and casualty license? 60 hours, 75 hours, 90 hours, or 120 hours? Question number 2. How many days notice must an insurer provide to cancel a policy in New York? 30, 45, 60, or 90 days? Question number 3. How many days notice must an insurer provide for non-renewal of a policy in New York? 30, 45, 60, or 90 days? Remember, non-renewal. Number 4, what is the minimum bodily injury liability coverage required per person in New York? 10,000, 25,000, 50,000, or 100,000? Question number 5, what is the minimum property injury protection PIP coverage required in New York? 25,000, 50,000, 75,000, or 100,000? Question number 6. How many hours of continuing education are required every 2 years for New York insurance single line licenses? These are the things that should be popping out to you when you're reading these questions. 10 hours, 15 hours, 20 hours, or 24 hours? Number 7. Which federal law covers railroad workers and requires proof of employer negligence to recover damages? A, the Jones Act. B, U.S. Longshore and Harbor Workers' Compensation Act. C, Federal Employers Liability Act, FELA. Or D, Federal Railroad Safety Act. Now, this doesn't exist. Remember I said, why couldn't they just put the name in it? So again, we're going to go over the answers in a second. They're going to sometimes throw in things that sound like the right answer, right? If I was taking this test and had not studied anything, I would have picked D. But you have studied this, so you should know that that doesn't exist, right? We didn't learn that. In fact, she said in the video, I wish they would just call it what it was. This one does not. So hopefully that helps you and come into that answer. Number 8, what is the primary purpose of the New York State Disability Benefits Law? A, to provide benefits for work-related injuries only. B, to provide wage replacement for off-the-job injuries or illnesses. C, to offer unemployment benefits for short-term job loss. Or D, to cover medical expenses for any type of disability. Number 9, how many private insurance companies must deny coverage before a property owner can access the New York Fair Plan? 1, 2, 3, or 4? And question number 10, what does exclusive remedy mean in workers' comp? A, employees can sue employers for any injury. B, employees cannot sue employers for workplace injuries except intentional acts. C, employers are never liable for injuries. Or D, employees must prove negligence to recover. All right, let's see how you did. Question number 1 was C, 90 hours. New York requires 90 hours of pre-license education for P&C insurance licenses. Number 2, 45 days. B, insurers must provide 45 days notice to cancel policies in New York versus standard 30 days. Question number 3 was C, 60 days. Insurers must provide 60 days notice for a non-renewal. Question number 4, B, 25,000. New York requires a minimum bodily injury liability of 25,000 per person, $50,000 per accident. Number 5 is B, 50,000. Explanation, New York requires a minimum of $50,000 in PIP coverage, all right? Number 6 is B, 15 hours. New York requires 15 hours of continuing education every 2 years per single line insurance. Number 7 was C, Federal Employers Liability Act, FELA. Remember, I said FELA equals trains, which is not a totally true sentence, but hopefully that runs through your head if you get this question on the exam. FELA covers railroad workers and requires proof of employer negligence to recover damages, unlike standard workers' comp. And remember, this is the one that had that, Federal Railroad Workers Act. It sounded right, but it's not. It's not what it's called. It's not true. That doesn't exist. Number 8 is B, to provide wage replacement for off-the-job injuries or illnesses. The DBL provides short-term cash benefits to eligible employees unable to work due to non-occupational injuries or illnesses, off-the-job injuries or illnesses. Number 9, the answer is B, 2 companies, right? Property owners must prove that they've been denied coverage by at least 2 private insurance companies before accessing the FAIR Plan. Number 10 was B, employees cannot sue employers for workplace injuries except intentional acts. Workers' comp is the exclusive remedy, meaning employees waive their right to sue in exchange for guaranteed benefits, except, of course, in cases of intentional harm. So, see how you did? Hopefully that was a breeze. If not, go back and go over the ones that you may have struggled with. Watch the video again. You can download our workbook that goes along with this. There will be 10 new quiz questions at the end of that workbook as well. Or, worded a little bit differently and such. So definitely, if you have not had a chance, check out our workbook on fastpassinsurance.com. We also are adding quizzes and exams and such, so depending on when you are watching this video. So you have rocked through this. You should be a master at New York property and casualty laws and regulations between watching part 1 for the regulations common to all lines and then this video, part 2. Make sure that you identify the policy type that they are asking. Watch for New York specific endorsements. Pay close attention to unique New York endorsements and their specific applications. Separate auto no fault from liability. Clearly understand the distinction and interaction between New York's no fault and liability auto coverages. Workers' comp exclusive remedy. Remember that workers' comp typically serves as the sole resource for workplace injuries. Think conceptually. Focus on understanding the underlying principles and why behind the laws rather than just memorization. However, state laws and regulations are one of the sections where memorization just really kind of comes into play, right? Like Fila equals strength. Now, I can conceptually explain that a bit more, but it, those are things that help you get the answer right? We're just trying to get a pass so you can get out there and start your insurance career where you will learn way more in detail how to actually, write these policies and how they all work. So just want to get you that pass. So please make sure to like and subscribe. We are going to be dropping more videos every week, state law specific ones, state specific ones, and all of the exam content. So please subscribe so you can check those out. Check out our workbooks and practice exams and other resources online, fastpassinsurance.com. And good luck on your exam. Wishing you a fast pass. See you soon.